Hey guys, Leon here. So today we're going to be talking about Tesla's earnings quarter, Q2 of 2020, and wow, it was pretty amazing. So I had the conference call on here. I basically listened to the call, made some notes, and I'm going to share it with you guys. So just to start off with, their earnings per share expectation, according to per Yahoo Finance, was 0.03. It was 3 cents. But they actually earned $2.18. So that's dramatically higher. So let's get right into this call, and then we'll kind of go through the presentation materials. Then towards the end, we'll talk about should you invest. So this is their fourth profitable quarter. That's been all over the news, meaning that they can possibly go into the Standard & Poor index, meaning that now when people buy the Standard & Poor, money automatically goes into buying Tesla, especially since their market cap is around 300 billion now. So they're going to be buying more shares of Tesla than companies less market cap than them. So, all right, the Gigafactory next Gigafactory will be in Texas, where they're going to be making the Cybertruck and the Semi and the Model 3 on the eastern half of the U.S. They did mention that this will be an ecological paradise. I think this is in Austin, Texas. And it'll be an ecological paradise that'll be open to the public right on the Colorado River, just a few minutes down from downtown, and also pretty close to the airport over there. They talked about their dollar per watt on the solar roof is $1.49, and they did mention the best one or their money back or your money back. The Model S is now 402 miles in one drive. They can now make it from Los Angeles to San Francisco with miles left over. Elon Musk said that full self-driving, I quote, profoundly better than people realize. So he said that it can almost go from his house to work with no interventions. He recommends that it will be complete by the end of this year. He's been saying that for many years, but we'll see. So he also mentioned next 12 to 18 months, they will have 3 new factories. Not sure if this includes Shanghai, the one in Austin, and also Berlin, but probably. So, things to be excited about: Gigaberlin, Cybertruck, the Tesla Roadster, the Tesla Semi, and also Battery Day on September 22nd. People will be surprised on just how much there is to see. Then it cut over to the CFO, Chief Financial Officer. Elon Musk is the Chief Executive Officer. So the CFO says, they kind of go over some numbers. They have 8.6 billion cash balance now. This is important because one of the big criticisms about Tesla was that they didn't have enough cushion to pay their debtors, and possibly they were going to go bankrupt. That's why there were so many Tesla bears and people shorting Tesla. But now that they have $8 billion, it's more of a cushion now. Free cash flow over 400 million. So then they started taking questions. The first question was asking what kind of future developments in the automotive industry. So then Elon Musk answered that they're looking to create compact cars and also higher capacity vehicles. But the most important way, the most dramatic way, will be full self-driving for monetizing the fleet. I quote, "The biggest asset value increase in history as a step change overnight, end quote. So pending on regulatory jurisdictions, a few million cars suddenly becoming 5 times more valuable, higher utility. Basically, you snap your fingers and then now they're just more valuable because they can roll out that autonomous driving software. So he had mentioned 12 weeks of utility to 60 hours of week utility, meaning that the car is being used for 12 hours per week to 60 hours per week. So then he presented the question: what will people do when it's fully autonomous? Are you just gonna, stare outside and kind of watch the car drive you, or people are probably going to spend their time on productivity and entertainment? Entertainment probably in the form of video games or movies, and then the productivity through doing work. So he said that they can monetize this. In addition to monetizing this, they can also monetize premium connectivity. He didn't explain that, but I think that was talking about increasing bandwidth to be able to support that. Then he also talked about, in order to roll this out, how much better than a human does it need to be? That's the real work. He talked about the march of nines, meaning how many nines do you need to make it safer so that governments will allow you to use it? Does it need to be 90%, safer than human driving? Does it need to be 99% safer? What about 99.9% or 99.999? How many nines do you need? And so you get the point. He said that, then he kind of dropped in this little tidbit about his concern of AI. He said that the people most wrong about AI are the ones very smart, because they cannot imagine a computer being way smarter than them. That is the flaw in their logic. They are just way dumber than they think they are. So then the conference, as usual, they just say, okay, well, thank you. Moving on to the next question. So then somebody asked about the alien Dreadnought. I wasn't really sure what this was, so I kind of Googled it and looked into it. The alien Dreadnought kind of theme in Tesla is talking about, if you ever, for those of you guys that are into science fiction or video games, it is this idea of this alien technology that comes in and invades Earth, and they're just unstoppable because of their manufacturing and also technological capability. If you've ever played Mass Effect, it makes me think of the Reapers. They're just coming in and like destroying everything. So he talks about engineering talent that to where they have machines that make machines. He says that they're approaching version 1.0 of the alien Dreadnought. Each factory is getting better and better. They're changing the design of the car to make it more manufacturable. And then they also talked about vertical integration, meaning all the way from the supply chain all the way to the very autonomous driving at top, or the completed cars themselves. So he kind of had he talked about potential cost savings. He said, if you were to put a GPS on the supply chain from the mined material to the end, it would travel around the world 6 times. He wants to reduce it to 1 time, and that would be an order of magnitude improvement. An order of magnitude means 10 to the power of x, x being your order of magnitude. So if it's 1x, then that would be 10 times. If it's 2x, that would be 100 times. That's how you look at order of magnitude. So he wants to make factories better, less money, less time, and reducing inefficiencies. He also kind of asked this question, when we ask people to do labor, are we respecting their time? The potential for improvement is tremendous. Manufacturing need for engineering talent is way more, they have a way more need for that than expected. Then the next question kind of presented about AutoBidder in regards to the Tesla energy industry. I had to Google AutoBidder because I didn't know what it was. Apparently it is software, the easiest way to describe this would be software that uses machine learning to analyze data to optimize financial performance in market environments, price, load, generation, forecasting, optimization, and smart bidding, kind of akin to Google's AdWords in bidding for exposure. So they're kind of using optimization in energy markets to increase, they say, stability, and also, for when the investor hears it, for monetary gain. So Elon Musk goes on to say, well, Wall Street ignores the energy sector part of our business. To think about this, what he means is the total addressable market, meaning how big. So if we were to say total addressable market, in any, this is kind of a business concept where you look at any industry, whether it's shoes, if theoretically you were to capture the whole shoe market, how many billions would that be worth? That's total addressable market. So if you think about total addressable market of the energy market, he said, I quote, way bigger than automotive, end quote. So he talked about, because you need sustainable energy generation through wind and solar, battery storage, electric transport. The mission of Tesla is to accelerate sustainable energy. So both battery storage and sustainable energy generation will both be enormous. Then he kind of went into the details of AutoBidder, which is autopilot for grid type batteries, an autonomous energy market participation that does high frequency trading and front running. These are kind of some taboo terms that people have traditionally used for illegal activity or shady activity by the investment banks for optimization in financial markets. But for Tesla, they want to use these. Elon Musk kind of stepped in and said, don't use those terms because they're taboo. But he's saying that they want to use this for grid stabilization at the millisecond level. So, and with the goal to solve the energy sustainability problem. So basically using these methods to for good instead of bad or evil. Then he goes on to talk about the real limitation of Tesla growth is cell production at an affordable price. And he said, we'll talk about that on Battery Day. We will be testing Tesla Semi with our own freight from Fremont to Nevada. And then he goes on to talk about iron phosphate versus nickel-based cells, which have higher energy density because you need higher lightweight, higher energy to lightweight forms of energy density when you put these into vehicles. So the range of almost 300 miles with the iron phosphate pack with powertrain efficiency. They're trending the cobalt use down to zero. And he went on to say, we need more nickel, please mine more nickel at a high volume. Tesla will give you a giant contract if you mine nickel efficiently in an environmentally sensitive way. The new EPA range, gold standard will be 300 miles. Then he goes on to talk about Tesla insurance. Tesla insurance, it's actually really interesting because they talk about Tesla insurance is actually very interesting because they talk about the business of insurance is using assessing risk and having to pay out premiums. So the most difficult part of insurance is that you have to have the accuracy in your information while you assess risk. But because Tesla has basically, and they said, with your permission, we can collect all of the data, GPS, your driving habits, the speeds you're going, where you go, and everything. And with that, they can use actuarials or risk prediction to see how much your premium should be so that they can make it more accurate. Meaning that if you're a safe driver, they can charge you a safe premium. If you want to be an aggressive driver, you're free to do so. They're just going to charge you a higher premium. And then they mentioned that they have a unique advantage with this information because no other insurance company has access to this information. So they can use this data captured in the car and driving profile of the driver to assess the correlation probability of crash. They they currently have this product in California. They said that they currently have 0.9 version of Tesla insurance, and they, instead of rolling this out to other states, they decided to improve on this in the telematics is what they use on the telematics side. They said they're nearly complete with this, and they will begin transitioning to other states. Assuming regulatory approval will go smoothly, they'll have this by the end of the year and continue to roll out nationwide with version 2 and 3. They also mentioned this idea of having a feedback loop, meaning that they have the ability to see what is driving the insurance expense. Let's say you have a minor fender bender, but then when you go to the body collision, the repair costs $15,000, then that costs the insurance company more money. So what they can do, they call it a feedback loop, because you can find out the cost over here, communicate back to the engineers, and then the engineers can engineer a less expensive design when they repair, and then continue this feedback loop so that they can improve the design of the car. Essentially, fundamentally, a better insurance product. So then he goes on to talk about gross margins improvement in Shanghai. They're not at full capacity, so there's opportunity to optimize the cost structure. Previously, parts were shipped from around the world to the Shanghai factory, but he has saved on costs by locally sourcing them to make massive cost reductions. And he said that there are many companies on standby very eager to support the Tesla supply chain, with candidates in China and also in Berlin, and also in Europe for Berlin as well. So then the next guy coming on is Tony Sacconaghi. If you're not familiar with this guy, this is actually the guy that Tesla called a bonehead for asking a question a few years back. He actually presents a pretty good question. He says, the operating margin is about 5%. So let's kind of just real fast talk about operating margin. On your income statement, it's one of the financial statements that talk about the amount of revenue and profitability. The top line is going to be sales and revenue. That's the top line number. subtract, I won't go into too much detail, but kind of a general way to think about this is you subtract your variable costs, that's your gross margin, then subtract your fixed costs, and then that's your operating margin. And then when you take out tax and I think depreciation, it comes into your net income. So he's talking about gross margin, where after you subtract your fixed and variable costs, he said that the margin percentage, meaning that percent of the revenue is your your operating profit. So he said it's only 5%, with 4% of that being regulatory credits, and without the regulatory credits, the margin would be at 1%. How do you answer that? Regulatory credits, let me kind of go into this. I'm not exactly sure how regulatory credits are, but I'll kind of give you a general idea of how I understand them to be. Basically, the government has put limits on how much carbon can be produced in the environment. So each polluting company is allocated a certain amount of carbon or regulatory credits in terms of polluting. And companies that are clean can sell their excess credits that they don't use to companies that are less clean. So basically what happened here is that a large, I think 1/3 of their profit, of their gross margin was due to regulatory credits and not just based on cars themselves. So basically they got money for being clean, clean energy. Kind of, I believe rightly so. Everyone can have their own opinion on that. Now, so then Tony Sacconaghi is saying, like, well, how do you answer that? Your profits are coming from these regulatory credits. So Elon Musk and the CFO kind of just pause for a second, and it's almost as if you could picture them looking at each other, seeing like, what are we going to say? And then they go, we don't manage the business with the assumption that regulatory credits will continue. Buyers in our car in the US get 0 federal tax credit, while competitors still get $7,500, yet it seems like demand for their cars is far superior. So their strategies are going to be continue to decline cost in the production of the product, and also the potential for software-based revenue, basically through the full self-driving autonomous vehicle. Basically once they switch that on, they're going to monetize the fleet. Also more features, we talked about when they're self-driving, people are going to look for other ways to spend their time, and so they can make money off of that. They're also going to make money off of an autonomous driving or full self-driving ride-hailing network, basically a driverless Uber owned by Tesla. And I think that how they're going to do it is that everyone that owns a Tesla, when you go to work, rather than making your car look for parking, your car just drops you off, and then it will go give rides to other people and then make money for you should you choose to do so. So then he talks about the operating expenses will continue to come down with lots of opportunities, such as through customers interacting with the company, and also sales, and also service, and also delivery. Let me kind of just pause for a second and talk about car monetization, how automobile companies make their money. Now, per Elon Musk, not from this call, but on a previous video that he made, he talked about how automobile companies make their money. It's almost like the razor and blade model. As in the razor and blade model, you don't make money off selling the razors, you make money off selling the blades. Basically, you can almost give someone a razor for free, and then when they buy the blades, you can just upcharge that. So he made the comparison saying that the automotive industry, basically they don't make lots of money when they sell the cars themselves, but after you drive the car and you need servicing at the dealership, then they can upcharge the parts and all the fees that the dealership has to pay the car manufacturer. And that's why when you take your car to the dealership, the prices just seem so unreasonable. It's because that's where they make their money. So Elon Musk's plan is, instead of upcharging on parts and kind of ripping you off that way, he was saying that, well, instead we can monetize the autonomous driving software, because the cost to produce software for one car is the same cost as it does for 1 million cars. So he's going to provide value. He wants to provide value that way. So then Tony Sacconaghi presents his next question. your goal of driving electric vehicle adoption, how do you think about the trade-off between industry-leading profitability and making cars more affordable? You have always picked the path of more growth and adoptability. You could have kept the price where it was for higher profits. How do you think about that trade-off? So then Elon Musk says, well, I think we achieved both, especially if you factor autonomous driving. I think we can go way beyond industry-leading margins when you factor that autonomous driving. Then he kind of went off and kind of said the difference between value for money and affordability was kind of interesting. You know, I like these little Elon Musk tidbits. You know, he says, I want to distinguish between the difference between value for money and affordability, because if your value for money, even if it's at infinite levels, if you don't cross the affordability threshold where people can actually buy your car, then you just have this amazing product that nobody can afford. He said that he's still unsatisfied that cars are not affordable enough, and he says we need to fix that. We want to be slightly profitable, but priority is to maximize growth. So that was his answer to that. Next person asks, in these unusual times, can you characterize the demand environment for your product? Meaning talking about how has the coronavirus affected the demand. He basically said, don't worry about demand. And he basically said supply chain is the problem. This is basically his kind of humble way of saying our cars are flying off the shelves. We cannot manufacture enough cars to meet the demand. Just don't even worry about demand. Okay, that's the least of our problems. Okay, so we are going to look at the supplementary materials for this quarter. This is the 2020 Q2 Tesla materials and their highlights. So basically talking about cash flow over here, their cash. The important thing is that they now have a decent amount of cash. Profitability, they generated that 5.4 operating margin. We'll kind of go into the details of that here in a second. And then also the 4 quarters of sequential profitability, everything you've been seeing on the news that they might be now into the Standard & Poor 500 index. Next Gigafactory will be in Austin. And there's that. And then we go to this part I highlighted right here. Despite the closure of our main factory in Fremont for nearly half the quarter, we posted our 4th sequential GAAP profit in Q2 2020 while generating positive cash flow. Basically saying that even with this unprecedented environment, they were able to make money. And then over here, they talk about GAAP operating margin reached nearly 5%, and they expect their operating margin to continue to grow over time, ultimately reaching industry-leading levels. Here is the kind of quick and dirty version of the income statement, and we kind of talked about, top line numbers, revenues, then you subtract the variable cost to get the gross margin. Then after you subtract the fixed costs, you then get the operating margin, and then after you account for tax, depreciation, amortization, then you get the net income. And then after that, if you divide that by the amount of total stock, then you get the earnings per share. These are just some kind of things to look at. So remember, we talked about regulatory credits. The regulatory credits is about one third, I think, of the gross profit. And then that creates a 25.4% of gross margin. But then after you factor in the operating expenses, you actually get a 5.4 margin. And this is where they have that awesome quarter of earnings per share of $2.18 per earnings per share. You go down here and they have the revenue. This part basically says that even though they made more money because they've been lowering their prices, they've been offsetting that. And then this is basically talking about they're continuing to decrease their production costs, and also through full self-driving monetization that they can make a lot of money with that. Then you can also look at kind of individually here all the numbers exactly to see how many they sold this quarter. And you can also look at their energy as well. And also, this is actually interesting. I wanted to talk about superchargers. A while back when I was actually, back when everyone was saying that, oh, Tesla's a dream, and then when they have competition, they're not going to handle it. When I looked at these, I asked myself, who else has a supercharger network like they do? It's if you look at this, it's not even comparable. So had you read these, documents and what Elon Musk had to say, and also the company had to say, you wouldn't have had the skepticism that a lot of people were having, except for maybe the money issue. But they've resolved that now. So next part is it basically talks about their different factories. They have the one in Fremont, the one in Shanghai, the one in Berlin. And then this basically kind of talks about their production levels and where they're at. Remember, Cybertruck, and then you have the Tesla Semi, and then the Roadster, all in development. Things to be excited about. And then this part right here, wow. Even in this environment, all of the automobile manufacturers have lost money, or they have decreased global deliveries. Sorry, this is global deliveries, while Tesla is the only one that actually had positive growth. Then you talk about, this part talks about their core technology and kind of their proprietary stuff. This is their distinctive competency. And so they have, autopilot and self-driving. We went into a lot of detail about that. And they talked about vehicle software, kind of over-the-air updates. These are all things that, when anyone makes an argument about competition, they have a distinctive competency. No one else has this stuff, and they're all very great features. Then they also talk about the battery and powertrain and how they've broken the threshold, the 400-mile threshold for 402 miles. Then this part over here, we talk about, you look at the Model S and also the Porsche Taycan. I don't know if you kind of pay attention to Elon Musk's, things he gets into on Twitter. I think Bill Gates had said that he's not going to get a Tesla for his electric vehicle. He's going to get a Porsche Taycan. And then Elon Musk's response was, Bill Gates is overrated, in my opinion. That was hilarious. So, and then you go down here, just other highlights. They talk about their energy business, and then we talk about AutoBidder. That's where they were talking about the high frequency trading and front running. I don't fully understand it, to be honest, but probably because it is pretty complex. But basically what it sounds like is that it is using software and artificial intelligence, they can make money and also help grid stabilization. So then next part basically talks about their solar business. They're saying that the cost of the solar roof actually will be offset by the energy savings by 6 years, meaning in 6 years, the savings that they have in energy will pay off their solar roof. They also have a lowest cost and guarantee with money back guarantee and all that. And then over here, you can kind of see their retrofit solar pricing. Then they go over here to Outlook, just saying going forward, what's important. We talked about a lot of this, but the main important thing is that they have sufficient liquidity, which is basically the argument against Tesla that they were going to go bankrupt and all that stuff, that why everyone shorted them. We go in here and just kind of some photos and charts. They're kind of showing off their new real estate factories. So this is the Gigafactory Shanghai, and then this is the interior, and they kind of show more of the interior. Still factory Shanghai, looks pretty state-of-the-art and pretty awesome. Then they look at Gigafactory Berlin, what they've got so far, and then over here shows you what they plan on Gigafactory Berlin to look like. Looks pretty cool. Lots of plants and stuff out there. Go over here, and these are their key metrics quarterly, and you can kind of just see some more of their financials. Over here is trailing 12 months, basically means that you take the past 12 months, average it, and then that's the new number that you get at each one of these intervals. So if you look at it, their operating free cash flow have steadily improved, and then this is where you get, this is their first 4 quarters of profitability. Okay? And this brings us to our question, should you invest in the Tesla stock? Well, like we say on our channel, I'll give you the pros and cons, kind of let you decide, okay? So pros, they have more demand than supply can meet, okay? This is one of the fundamental concepts when you sell anything. If your biggest problem is that you can't meet if you can't make enough supply to meet your demand, this is a really good sign that this is a profitable company. As long as they at least have positive profits, okay, which Tesla has for at least 1 year now. So they also have large growth potential. If you thought that Amazon was big, you have no idea what Tesla has in mind, okay? Their growth potential is unimaginable, okay? So think about it like this. They have what he says, the alien Dreadnought automotive industry, including their truck, the Roadster, everything else they have, and also the potential for high passenger vehicles and also the compact cars. They also have all the cost savings potential through manufacturing, supply chain, logistics, and manufacturing, all that stuff. Monetizing full self-driving, basically a new market that they are basically leading, that they're pioneering the way through. Then not just through full self-driving, but also full self-driving ride hailing. So that autonomous Uber network, that we talked about before. Then also the complete industry from generation, storage, and transport, along with grid and monetary optimization through their auto bidder software. Then they also have the Tesla insurance. Now you might think, well, Tesla insurance isn't that big of a deal. Well, think about it. If they do manufacture, let's say, because if demand right now is higher than supply can meet, that just gives you an idea the potential of how many cars can be on the road. So their insurance product can be as profitable in direct correlation with the amount of Teslas on the road. So if they plan on taking over the world with this alien Dreadnought manufacturing a level of cars, then you can imagine how much money they're going to make on the insurance as well. Okay, and then this also includes all the stuff, all the additional add-ons to the car, with that premium connectivity and also the entertainment and productivity while it's autonomous driving. Then there's also the manufacturing when we talk about manufacturing optimization, most companies, when they use that term, they talk about marginal benefits. When Elon Musk talks about it, he talks about orders of magnitude. We're talking about 10 to the X, okay, levels of improvement. My feeling when I listen to the call is that Tesla's value is not in the cars themselves, but on their manufacturing talent, engineering, and that basically alien Dreadnought manufacturing level that they're looking to achieve to meet the endless demand. I want to talk about this concept, before we go on to more Tesla pros. I want to talk about this concept of this MBA term called competitive advantage, distinctive competency. So this term basically describes the difference between your local mom and pop donut shop and Apple. So the local donut shop doesn't really have much to distinguish their product from the competitor across the street, as opposed to Apple that has proprietary software and hardware and all of their kind of integration of all of that together to create something that nobody else can offer. Because of that, they're a monopoly. So in their industry, they can charge whatever. When you have a monopoly, you can charge whatever price you want, and people will still pay for it if they determine that your product is necessary. So overall, the goal in business, because monopolies are illegal, you don't want to say this too much, but in business, ultimately the goal is to drive from maximum competition to monopoly. And if you get to oligopoly, meaning a few people that can provide it, like oil producers, or also the current automotive industry, which is an oligopoly, you can still make money there too. Okay, so Tesla's distinctive competency and competitive advantage is that Elon Musk, the CEO, also owns SpaceX. And SpaceX comes up with, and SpaceX has engineering talent that is working on artificial intelligence and also, all these maximization of manufacturing. But in addition to that, all the proprietary technology that they're creating, they can just transfer over to Tesla as well. Then how are Tesla's competitors going to be able to compete with that? To give you an example, they're taking materials from I believe their Starship rocket and putting that onto the Cybertruck, stuff that was designed to go into space. And now they're going to put on their truck, and now they're like, well, it's bulletproof and you can smash a sledgehammer into it and it's fine. How is your competitor going to be able to come up with a response to that, right? The other thing is, they talked about the Tesla Roadster. They said the base model is going to be in the threes, for 0 to 60 seconds. But then he said, well, we're also going to put I don't know, I think he said like a rocket engine in the back or something. And so, they're taking a rocket engine and then putting that into a Tesla Roadster. That's just not fair, okay? I'll believe it when I see it, but if he does do that, that's not fair. Your competitors can't compete with that. So I just want to talk about that for a second. So the other thing, another pro is that their balance sheet has improved. That was the biggest case that the Tesla bears and also all the people who were shorting Tesla had argued that their balance sheet was not very good, that they were going to go bankrupt soon. But now they have created enough cushion to prevent that bankruptcy, at least in the short term. They have reached profitability, so there's a possibility they could enter the Standard & Poor's 500 index index, and then all the funds will have to buy their stock if they want to mimic the Standard & Poor's. Tesla is an ESG stock. ESG is a term that stands for Earth, Sustainability, and Growth, which is something that fund managers are now looking at in determining whether or not they're supporting these companies. Millennials are very ESG conscious, and you're thinking, well, why do I care what some millennial thinks about a company? Because millennials are now becoming the money managers as they get older, and the older generation is retiring. So when they become the hedge fund managers, when they become portfolio managers and 401ks and all that, then they decide what kind of companies they want to buy, and if they see that ESG is good, then they'll buy these companies. It's kind of like a reputation for a company. You don't want to buy a company with a poor reputation that's destroying the environment. The next pro is that they also have resistance to COVID and the international tariff issues, because their demand is exceeding their supply. COVID-19 essentially has no effect on them besides through the manufacturing process. Additionally, when we talk about the tariff, issues internationally, meaning all the things we had with China last year, does that affect Tesla? Not really, because in order to charge a tariff, you have to export a good. But if you make a product in that other country, then it's not exposed to a tariff. And additionally, when you have the factory over there in that country itself, and you employ the citizens of that nation, then the government is more likely to want to keep your business there. Kind of like in the US, we're okay with having Toyota manufacture here because it employs Americans. So think of that same thought process over in China, over in Berlin. So they're resistant to these. All right, time for the cons. So ultimately, all of this is dependent on Elon Musk. And this is not very good risk diversification, because if Elon Musk goes through personal issues again, like we saw in the past, where he was coming with crazy tweets, and also he was really stressed out because he had the 140-hour work weeks, or if he gets sick, or hopefully, or if anything happens to his safety, I hope nothing happens, but there's always that risk that if he can no longer be at the helm, then the company might not realize its goals. Okay, he has to be the one leading Tesla if we were to make the thesis on the Tesla case. Next con: while the total addressable market is large, that is dependent upon Tesla's ability to execute. They may have a really good idea of the industries that they want to penetrate. They have to be able to execute effectively, and their technology has to work. So that also takes some time, and there's also risk in that. While he eventually delivers on everything he promises, he's usually late. So we always have to keep that in mind as well. The next con is that SpaceX is still his primary goal. If he's on the brink of going to Mars, he's probably going to pick going to Mars rather than focusing on Tesla. I don't know that for sure, but that's what it kind of sounds like. Okay, so if going to Mars requires more of his time, he may hand off leadership of Tesla to somebody else. The other con is that 1/3 of Tesla's gross automotive profits were actually from regulatory credits, which may end depending on who's elected, at the end of this year. With a Democrat candidate, probably not going to end. With with Trump, it may. Okay. In summary, my opinion is that if you have a long-term outlook and can handle the risks, it might be worth a buy. I'm not telling you to go buy it, okay? You have to do the research yourself. My job is just to prevent you with some clarity into the company, okay? There may be some short-term volatility, but I think in the long term, it may be worth a good investment because of the massive amount of growth, and Wall Street pays a massive amount of premium for growth stocks, okay? If you decide to buy, dollar cost average into it. If it pulls back, you can scale the more amount that you want to buy into it, okay? In full disclosure, I own shares of Tesla stock. I probably will end up buying more, okay? Don't blame me if it goes down, okay? There's a likelihood of volatility, meaning that it could go down in the short term, but I think this is just my thought. In the next if you can handle 5 to 10 years, it may be worth owning. But I'm not telling you to go own the stock, okay? So overall, in summary, I feel like Elon Musk's thinking is alien-like technology that was stolen and implemented into mankind. So that's why I think it's super amazing, okay? So thank you so much for watching. If you enjoyed this material, please like, subscribe, share with a friend, leave a comment below. It all helps me out, okay? All right, thank you so much, and we'll see you in the next video.